KSL Holding Berhad stock has recently crashed down to hit its 200 days moving averages level at around 1 ringgit 72 cent. So is now the right time to buy into it, or would it crash down further? Today I'll be sharing with you stock analysis on KSL Holdings bearing stock ticker KSL 5038 on both its latest technical analysis and its fundamental. So if you are keen to find out all about KSL Holdings stock, be sure you watch this video till the end. Before I begin, I want to say that with the US presidential election just around the corner, that is on the 5th November this year, the stock market is gonna be choppy. In fact, our Malaysian stock market has been super choppy as well of late, making it quite tough to do swing trade, if not impossible. Unlike the US stock market, where the rebound of a stock would be of decent margin before it came back down, versus stocks on the other hand, upon hitting major support or upon a high probability setup occur, only tend to go up by 2 to 3% before it came back down to make a lower low. This is also the reason why I allocated 80% of my capital into trading US stock and only 20% into Bursa trade. And I'm also in 70% cash position now to prepare for correction if any caused by the presidential elections and be ready to scoop up great stock at good discount should a correction occur. Now back to KSL Holding Berhad. KSL Holding is principally involved in property development and property investment. This company is a profit-making company. If you are to look at the chart here, you could see clearly that for the past 3 years, that is from financial year 2021 to financial year 2023, KSL Holding has been increasing its revenue and net profit consistently. From a revenue of RM 467.8 million in financial year 2021, it rose up to chalk in a revenue of 1141.6 billion in financial year 2023, which represented a growth of 144%. And its net profit also grew from RM 114.4 million in financial year 2021 to RM 416.9 million in financial year 2023, which is an impressive growth of 264%, attributed to higher revenue and better margin. Unfortunately, despite being a profitable company for the past many years, KSL Holding is not a dividend-paying company. What about its debt level? Is KSL Holding having a healthy debt level? From this chart here, we could see that KSL Holding has a healthy balance sheet with a net cash position. Its current ratio of around 6.7 times indicates that it has more than sufficient liquid assets to pay off its short-term liabilities. As I'm making this video on 29 October, this stock is trading at last close 1 ringgit 77 cent at 12.30 p.m. So is KSL Holding stock considered cheap now at current price level? Fundamentally, the company is currently trading at a PE ratio of 4.2 times, which is the lowest among its peers where the ratio is applicable. The company price over NAV ratio of 0.5 times is also the lowest among its peers. This means by comparison to its peers, KSL Holding is considered cheap at current level it is trading. By peers comparison, KSL Holding also stood out as the company has zero net gearing and the highest current ratio of 6.7 times. At the same time, KSL Holding commands a great EBITDA margin of 46.8%, which is only second to IOI PG of 81%. Being able to command such a high EBITDA margin indicates that this company is highly profitable. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. When a company has a high EBITDA margin, it means that it's generating significant profits from its core operation even before considering factors like interest, taxes, depreciation, and amortization. As for ROE or return on equity, it is a financial ratio that measures a company's profitability by revealing how much profit a company generates with the money shareholders has invested in it. A higher ROE generally indicates that a company is more efficient at generating profits from its shareholders' investment. A reasonable ROE for real estate investment company can range from 8% to 15%. In this aspect, we could see that KSL Holding command a ROE of 12.1%, which is so far the second highest among its peers, just behind Ideal, which command a ROE of 14.1%. By now, we could conclude that fundamentally, KSL Holding is a sound company with increasing profit margin in the recent 3 years and also a healthy balance sheet. And based on its PE ratios comparison with its peers, at current level KSL Holding is trading, it is considered cheap. Technically, KSL Holding stock price has been declining since 24th September this year from a high of 1 ringgit 95 cents to currently, as I'm making this video, that is 29th of October, this stock has traded down to around 1 ringgit 76 cents, and this is a fall of about 11% thus far. And to be fair, Brussels stocks in general has been on a decline of recent months, weighed down by the political tensions in the Middle East and also the looming US presidential election soon. But what piqued my interest to buy into KSL Holding stock today is when I see how the stock price hits its 200 days moving averages level, which is represented by this green line, and how it managed to rebound. If we could see from the chart here, so far KSL stock price rarely traded below its 200-day moving averages. The last time this stock hit its 200 days moving average level was on the 6th of August this year, which we could also get to see how it rebounded from this level. Hence, we could conclude that these 200 days moving averages serve as a strong support for KSL Holding stock price thus far. The second factor is the symmetrical triangle pattern which KSL Holding stock has formed. Usually when a symmetrical chart pattern is formed, if the lower support is not broken and instead produces a rebound, the likelihood of the stock price to go back up to its higher resistance above is highly likely, at least to form a double top at around 1 ringgit 95 cents, and from my entry price of 1 ringgit 74 cents to the target price of 1 ringgit 95 cents, this represents a potential upside of around 12%. Anyway, with the general stock market being so choppy and volatile, should a market correction occur, I may choose to continue to hold on to this stock. Why sell a stock that has been making consistent profit with good EBITDA margin, a healthy balance sheet, and a promising property prospect, especially in Johor State, where KSL Holdings would stand to benefit from its ample land bank in Plow, Skudai, and Johor Bahru. For your info, I am still holding on to my Dilem trade too, despite its stock price has been declining of late unfortunately, due to the crash in the price of the underlying crude oil price. To me, Dilem is a profitable company and currently being managed by a visionary leader with great plans for the company. So I am comfortable holding on to this trade. But anyway, this is me. Everyone has got to decide for themselves how they want to play their game in the stock market. This is the end of my sharing for today. If you like the content of this video, do smash onto the like button below to let me know. And since Deepavali is just around the corner, I would like to wish all the Indians a very happy Deepavali and all Malaysians a happy holiday ahead. Bye, and I shall see you again in my next video.